This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now for a discussion on Thursday's market trade. I tell you what, the stock market will look really good on the day, but grains, livestock, we got some questions there to take a look at. Joining us now, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. And Bryan, good to catch up with you, sir. If I was someone who had some money in the stock market, I may be a little happy after Thursday, but that grain market was interesting on Thursday.
Yeah, and you're probably happier if you're in the industrials because the Dow Jones is up over 1,000 points right now as we talk. But the S&P is starting to climb out of its hole too. It's been down sharply all year in that 30% range. But that chart, if your chart is posted a bullish key reversal at the bottom back on October 13th, and then it rallied up, set back, and now it's rallying again. And if it were to take out the previous high, which it looks like it will today, the previous high rally, now you've got the beginning of an uptrend there. And so I don't know if that's a reflection of maybe the idea that there will be gridlock in Washington and not a one-way street as the last 2 years have been. But nonetheless, it does look like there was probably some money flow out of commodities. I went back and looked. If, let's say, you bought corn at the end of August, early September, and you've held your contract, it's losing you money. Whereas if you bought the equities, they're making you money. So the point of it is the corn market. If these funds long a lot of contracts, 272,000, just a little bit under 272 coming into last Tuesday on Friday's commemorative traders report, that market's not paying them a dividend, and so. It wouldn't surprise me if we're seeing some shave down of those positions, especially without maybe getting a yield reduction yesterday. I think there were some that were looking for that. It was just a slight increase, neutral at the end of the day. But it wasn't just corn. It was soybeans. It was wheat was off today. The livestock has been mixed to lower. It's been kind of a tough week for a lot of commodities.
Yeah, and you answered the question I was going to ask. Was it just a rotation of money out of commodities into the stock market today as the main driver? I know as well, export sales still weren't too great on the weekly wire. I'd have to think that may have been an impact of, in the psychology, maybe in the grain trade as well on the day Thursday.
Yeah, and that's part of this is the market. Everything's kind of relative to how people perceive things. So I've always kind of made the argument that markets move on perception, momentum, and attitude. And let's start with momentum. What has been the momentum in the corn market? It's been sideways, up some, down some. It's not necessarily a bad thing, but there is no upward trajectory, strong momentum. We're starting to gain momentum to the downside. That's a concern. When you talk to producers, you read a lot of analysts. I'm in the trench every day looking at things. I would say fundamentally, you've got this argument that prices shouldn't go down much if they go down, and should be providing good opportunity to buy, and ultimately they maybe need to ration inventory. But that argument is also, Jesse, made on a what if. What if it's dry in South America? Or what if they don't have a record crop? Maybe we need to flip that. What if they do? So the old saying, bull markets have long tails, that's starting to loom a little larger here. Our highs came last May. That is a long time ago. And of course, it's harvest season, and we're wrapping it up. But we got to see what's next. And we've talked about this before. You kind of get in this void about late October to mid-December. There just isn't any news other than a November supply and demand report, which typically is neutral, and that's what we got yesterday.
In this corn market, I noticed we've broken through. It feels like that lower end of the recent narrow range we've been trading, that channel we've been trading. Do you see that on the charts? Do you think we're going to go down and maybe find some new levels of support here in this corn market, Brian?
I do, and I would agree. That first level, I had my line drawn at about 661 on December, and we're through that. But we're back to where we were basically in the beginning of September. So if you use that low and draw your line, we're to it, and we're to the 100-day moving average, and we're to some consolidation. You could even drop down a little bit further and go to 647 in a quarter. That was from August 26th. So, but we are definitely in the lower end of any one of those ranges you want to pick. A big, solid, heavy close below the 200-day moving average gets back to that momentum thing I indicate. The momentum, 200-day moving average. Think about that. We're on a price lower than the average of the last 200 days. That's not a strong upward trajectory. That's telling me the market has sideways and kind of getting leery right now and maybe tired. And when you think about 6.80 or $7 corn, those prices don't look very attractive when you think the market might go to 7.25 or fill a gap that we left on the chart at 7.28 on December corn. However, they look pretty good if you're at 6.50 or 6.25. And it
Mhm.
wasn't that long ago that we were down and $6. It was mid-August. So um, I worry about the money shift in corn. Soybeans, I like that technical picture, and I like the fundamental picture with 210 million bushels of expected carry out. And the export pace has been pretty good, and so has inspections. But um, there too, the Mississippi problematic. If the market focuses on potential out of South America, then also read a report today that um, they call it the soy dollar in Argentina, different exchange rates. And again, the government on Sunday says here that the introducing new temporary exchange rate of 200 pesos per dollar for soy exports. That's probably going to pull beans out of Argentine farmers' hands and get it into the pipeline. The government wants that. They want those reserves. They want those dollars coming into the country.
Well, on thoughts like that too, Brian, corn, soybeans, we've talked about this before, but I'd have to think farmers got to sharpen that pencil up a little bit here as we near Thanksgiving and just if they haven't made some moves, maybe make some or just look at everything because it feels like that this general slog in these markets is maybe starting to turn to the downside, barring something coming in and giving us some premium again, which I'll get to in a minute, would be the Russia Ukraine situation.
Well, there's that, and there may be a lot of money sitting on the sidelines just waiting to buy this drought monitor map, which just looks
Sure.
mean. You know, it just you look at that and go, how do we produce the kind of crops we need to produce to kind of get out of the tight supply hole? How do we do that?
Mhm.
Here's the other thing too. So we're talking what if scenarios, but corn futures are at 6.53. They were at $7 less than 2 weeks ago. It's 47 cents down, and the U.S. dollar's dropped about 5%. All of a sudden, this is kind of an attractive price for anybody who's been waiting to buy. From an end user perspective, the dollar's at its lowest level in 6 weeks or more, 2 months to be more accurate, and corn prices at their lowest level in about 3 months, or close to 3 months. So there's a lot of things out there that could have the wheels in motion. The one thing we know we've got a crop, and we know we've got a supply, and we could tweak the numbers, but we know about the max of that supply. We're not going to all of a sudden see 180 bushel yield. What you could see is reductions in demand. Mm, I think the USDA was right on. They didn't change much, and they shouldn't. It's early in the marketing year for that.
The Russia Ukraine situation, it feels like that's probably the next item that the trade is going to focus on. We've got through elections, we got through the WASD, CPI numbers came out Thursday. All those items hit the market in this headline driven type of market. It feels like whether or not that grain deal's extended on the 19th is what it's supposed to expire. That feels like the next item in front of the trade here for the next week or so, Brian.
It does feel like it, and it does feel like it because it is. And it looks like what a topsy turvy deal. Putin backs away, then he comes back. Now they're talking. I guess they're going to meet here this weekend, or maybe tomorrow. They're going to meet and talk about
Mhm.
extension of that deal and keeping the corridor open. And what just to me, it still comes back to this: it's not business as usual for Ukraine planting and growing crops and moving crops. So I still have this. If you have this country that was kind of continually contributing to the world supply, it's going to be back. For the second year in a row next year, it'll be lower. So a lot of attention will focus on the southern hemisphere. That's where I think the big changes are due here in the next 4 months. Uh, Big producers, we've got two weather markets a year now. Um, we're so tight on inventory here that we'll see what happens, but that is huge. That's just I can't underscore it enough. I don't think we've ever had so much dependency on the world's never had so much dependency on the southern hemisphere weather as the next 6 months in front of us.
Well, Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is our guest today. Bryan, let's switch over our thoughts. I get real quick wheat market. You mentioned the drought monitor. I know that's a concern there. Any other thoughts you're watching in the wheat market, which felt like it had an okay day on Thursday, down just a little bit?
Considering what beans did and corn, wheat was kind of a victory today, even though it did finish with a couple of cents losses. When you look at the December Chicago, we did manage to claw back and close above $8. At one point, we were a couple of points were under $8, so it's that kind of that psychological $8 area there. The wheat market's got an interesting story in front of us. When you look at the world numbers, they increased about 1 million metric tons on total production and carryout. Not a lot of change when you look at numbers on totality. So, again, a reminder that exportable wheat, that is, countries that export it, remain pretty paper thin. So the reality is the market could quickly turn in a hurry, and that's kind of wheat's nature. But for right now, it seems like the market focuses on good enough inventory in the very short term. Export sales in the U.S. are slow, and the war continues on, but these negotiations seem to be pointing toward extension, and wheat's off because of it. There's no other way. Wheat's not down on crop ratings. You don't look at the weekly crop ratings for the second week in a row, and it's like the lowest in 20 years, and go, boy, I better hedge wheat at this price, considering there's no supply in the world. But wheat's produced in every major country of the world, and if there's good production capabilities in the year ahead, and those capabilities turn into wheat, that's problematic. Here's one other thing I just want to touch base on. I read an interesting article, and this is from an executive from I don't remember his name, but from Goldman Sachs. Basically said when the new administration came in, they were very bullish commodities because of the money that would be pushed into the overall economy, and that when you push money into the economy, the consumers as a whole consume more commodities, everything across the board, including energy. And we saw where everything rose up and rallied. And now that there may be more gridlock in Washington, the idea of this money continually pushing into the marketplace is not good. Now consumer debt's going to start to loom large, and equity, credit card debt, and those type of things. So that backdrop of money flow to buy commodities may be easing. That the relationship, real quick, was that when you look at the idea of maybe let's take the opposite. Let's say a tax cut across the board. So if a tax cut, if you make 10,000 a year and I make 100,000, we each get a 10% tax cut. I've got more money, but I'm going to spend it on something other than more cheese and crackers for myself. Where if you have 10, get a bigger tax break, and your neighbor does, you're going to buy more commodity items, where larger investors spend it on other things like a new car or
Mm-hmm.
some other type of investments.
Great thoughts there, Bryan. Let's shift to livestock real quick before we run out of time. Cattle had a decent day Thursday. Hogs felt like maybe a little consolidation. This cash cattle trade hasn't been very impressive this week for the most part. I just wonder your thoughts in cattle and in the hog market as well.
Everything seems tepid. Feeders ended up on a good note today. They even this morning when corn was down 8 cents or so, they were hardly going positive, and with the dollar off. But feeders picked up a couple bucks today. Um, the cattle, the hogs, you look at all of these markets, they to me they feel like a 8-cylinder engine that's kind of sputtering on 7 cylinders. They're just not roaring. They've got everything kind of in place to do that. And I think the inflation's the problem. I just think the traders cannot get optimistic buying into new highs and really expecting an extended uptrend when they know that the consumer is going to the aisle and picking up a steak and looking at it and probably sending it down. Or
Hmm.
or they look at two and they buy one, and then they look at the chicken aisle or they look somewhere. It's this whole, everybody's watching their pocketbook a lot closer. There's some reports indicate all these checkable dollars, that is, savings dollars from the pandemic, are basically spent and gone, and real savings and real income have been on a decline with inflation.
Bryan, how about that dairy market? What do you see in there this week? Any thoughts?
Yeah, I see some nice recovery up against some resistance points, though. We got a downward channel line on all the charts. So means you had a high, a drop off, a new high, a lower high, drop off, and that would rally back to where you connect the dots on the points in the top two rallies, and the market is up against that resistance point. Um, is the consumer going to spend the kind of money that they might have wanted to spend for Christmas and hams and cheeses and Super Bowls and all this kind of stuff? I don't know. It seems tepid. So I think you got a lot of these retailers having these Black Fridays in October and early November here, Jesse, and you got to kind of wonder if the retailer isn't kind of, or the consumer isn't kind of spending their money cautiously. And it just looks to me like the industry will just a little uptick in production. That's through efficiency, not through numbers. Labor's an issue, but it's hard to be. If we can pick up a buck or two in milk, I'd be tickled. I don't know if we can anymore. Where $20 plus is about all you're going to get, I think.
I'm Bryan. Great thoughts as always. If producers want a little advice from you and the folks there at Total Farm Marketing, what's the best way to get a hold of you guys?
I'd ask that they just give us a call at 800-334-9779. That is the best way. You can also email me, Bryan with a Y, at totalfarmmarketing.com, or just look at our website, totalfarmmarketing.com. We have a lot of resources there and ways to connect with us.
Fantastic. Bryan, always a pleasure, sir. Enjoy the rest of your week, and we'll talk to you again next week.
All right, super. Thank you.
Bryan Doherty with Total Farm Marketing joining us today. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.